Hello, good afternoon. We've titled this interview, Make or Break in the Equity Markets. Indeed, we believe that we've come to an important turning point in equity markets. Are they going to follow yields and oil higher? Or are they going to start to feel the pressure of higher commodity prices and higher interest rates? This is what we look at today. We first start with the longer-term chart of the S&P 500 on our FinGraphs platform. This is a weekly graph with the perspective over the next 2 to 4 quarters. The trend for now is still heading up, yet we have reached our impulsive targets to the upside, and our graph is telling us impulsive up done. We could also see that we have quite a bit of exaggeration here on our envelopes, which are touching each other, and that follows another exaggeration that we saw earlier this year. We could also see that the risk index is getting into or close to the overbought zone, which is a sign of exaggeration. Now, looking at the daily, there's slightly more leeway. We could see that we're also getting towards the overbought zone, but that there's possibly a bit more potential to the upside on our targets. We could see that they could lead us up to 2960 up to 23079. That said, on the downside, if a correction does materialize, we believe it will probably come and test the bottom end of our envelopes here, around 2700. So even though there's possibly a bit more to go, we could see that the risk reward here is now disadvantageous. We could also note that both envelopes are touching each other here also, which is a sign of exaggeration. Now, moving to the hourly, we could see that there's also a slightly bit more potential here, yet the picture on the envelope front has deteriorated. We could see that we saw an exaggeration here on an intermediate top about 10 days ago, and we are again on an exaggeration here, and prices seem to be reacting to the downside to this exaggeration. The risk index is sort of in the middle, but we could probably call this the beginning of a potential divergence between the oscillator and the price. So looking at all three, we could see that we are in an exaggeration here on the weekly graph, so the long-term graph. We are into the overbought zone on our risk indicator. Our targets have been achieved, and we are at stress on our envelopes. Also here on the daily, perhaps a bit more potential, but also also some risk to the downside. And our envelopes are also touching each other here, and the risk index is also in the red. Now, on the hourly graph, it seems like the trend may be starting to flatten. And in terms of targets, there's slightly more to be fetched, but not very much. So in general, from a risk-reward perspective, quite a dangerous situation. Now we look on to the Japanese markets, which has been stronger, and to look at it fairly here, there's still some potential to the upside and no real sign of exaggeration for now. That said, looking at the daily graph, we are getting into at least intermediate exaggeration with an overbought situation here on the risk index and both our envelopes which are touching each other. There's still a bit of potential to the upside, but the question is, will it be materialized or happen now over the next few weeks, or are we going to see an intermediate correction before that? Now, looking at the hourly, we can see that we are now in quite a strong exaggeration with our risk index and the overbought, our envelopes which have touched each other and are starting to reverse, and our targets which have been achieved. So on the Japanese market, it's hard to say that it's very much exaggerated on the weekly graph. The daily graph has more potential, but our risk index and envelopes are at stress, and the hourly graph seems to have reached the top and it's starting to reverse. So we would at least expect an intermediate correction on the Japanese market here over the next few weeks. Now, looking at weaker markets, we look at the Euro Stocks, and the Euro Stocks is already in a downtrend here. And this downtrend has a first support point towards the low end of our corrective targets, down below 3,000. So that's quite a bit lower. At best, it could probably correct down below 3,200 here at the high end of our corrective targets. But we are already in a downtrend here on the Euro Stocks. Looking at the daily graph, we are also in a downtrend here. We saw a nice intermediate low here in September, a nice bounce up, but the downtrend is still prevalent and could bring us back down towards 3,200 and possibly down to 3,066. We would, for now, label this move as a correction, and it's probably very important to watch a hypothetical downtrending trend line here, which would go through the tops, and for the time, it hasn't broken to the upside. We are going to watch this very closely, but for now, the downtrend is still prevalent and possibly until another couple of months. Looking at we also wanted to quickly look at the euro, which is very synchronized with the euro stocks, and we could see that we have quite a similar picture with a bounce which was made from August, and that bounce has recently died out and is resuming to the downside and possibly below 114, or we're almost there, and possibly down to 110, 111. Now, looking at the hourly of the euro stocks, we can see that it has also started to reverse down. It is in a corrective move down at the moment. The support is around 3,331. If we do break below these over the next week or so, that would mean that we're now in an impulsive target to the downside and that we could fetch much lower targets. So on the euro stocks, the weekly is already heading down. The daily is still heading down despite a nice bounce. And the hourly seems to be resuming lower at the moment as we speak. Now, we also look at emerging markets. Emerging markets have had quite a reversal of fate since the beginning of the year. They were indeed in an exaggeration at the beginning of the year, and they're now moving lower, to possibly to test the lower end of our corrective target around 39. This is the EEM iShares MSCI Emerging Index Fund Tracker. And so at the moment, we're still around 43, so there's more than 10% risk which is remaining here. On the daily, we're still on a downtrend. There's slightly less risk, possibly towards 39.80. We've had an intermediate bounce. It looks like a dead cat bounce for now, and there's a bit more to go, so the downtrend is still prevailing. On the hourly graph, we also are in a resumed downtrend situation. We had a bounce during September, but it is now rolling over and we are heading down again and possibly down to 40.5 and possibly down to 39.36. Now, what could actually, rapidly on emerging markets, we're in a downtrend on all three, and we don't see a robust support possibly at least until the next 2 months. Now, what could trigger such a downside correction on equity markets? Well, basically, Brent is shooting up quite aggressively. It has now possibly reached our impulsive targets to the upside, but it is still quite a strong momentum, and high commodity prices could make a difference to the downside for equity markets. We could also see that this may break equity markets, but will possibly reverse behind it, as we are already in quite a lot of exaggerations with our envelopes touching each other, our risk index in the red overbought zone, and our targets having been pretty much reached. Also very interesting, we can see the breakout that we just saw on treasuries. There's a lot of talk at the moment about the natural neutral rate that the Fed should be targeting. The Fed thinks it's possibly much higher. Some analysts think we're probably already on it. The question is, at what point interest rates, which are moving up, are going to start to negatively impact equity markets? Well, at the moment, this is quite a strong move and could be a trigger to the downside for equity markets. We also believe that if that happens, it will probably reverse rather quickly because we have already reached our impulsive targets to the upside, our envelopes are touching each other, and our risk index is in the overbought zone. We wish you a very good week. Thank you very much.